there are a number of reforms, of initiatives that perhaps should have been taken or has only been half taken, like the banking union, which almost certainly would have increased profitability of current banks. They've only been partly done, and we can explore that if you want. But the point remains that structurally, the European banks are still weaker in terms of profitability. There are also contingent things like MiFID and the number of regulations that certainly have, but that's the good reason.
Okay, Daragh, in terms of your perspective on the same question really as well, so they've done their structural reforms internally, but there's a lot of things about the broader market which, listening to Luca, still needs to be done to make the environment more profitable for the banks.
Yeah, look, I think Luca's essentially right. The problem for European banks is profitability. And the difficulty for a lot of them is, with interest rates where they are, it's still a challenge for them to get profitability back up.
Sorry, I'm going to just jump right on in there down your throat, and I'm going to rip up that assumption that you can't make decent net interest income and you can't make decent net interest margins in a low environment, because you don't lend at base rates, you don't lend at the ECB's repo rate, you lend at what you feel the risk reward is, and so you're paying your depositors nothing. I looked at some of the British NIMs, they're 3.5%, 4%, some of them, they look perfectly happy. You don't need higher interest rates in order to make decent margins.
Well, it depends on what type of bank you are, and certainly, the UK banks are in a different interest rate environment than Eurozone banks. Okay. And a lot of retail banks in the Eurozone, their interest rates are anchored on and off the low levels of Euribor. So, particularly in Southern Europe, Italian, Spanish banks would be materially more profitable if Euribor was higher. Now, as you move into larger wholesale banks and investment banks, you're right. They're pricing off risk more than they would be off base rates, but there's still a whole swathe of banking in Europe that is under pressure from low rates.
All right.
Well, how does that change from here? Because I know we're looking ahead to an ECB meeting this week where probably nothing interesting is going to happen, and here we are, we're pretty much zero rates in terms of overnight deposits, zero rates on liquidity, 0, 0, 0. So I mean, how do we get out of this situation? It needs the ECB, does it, ultimately, to give us or give the banks an incentive here to improve the business model?
Yeah, I mean, if you go back to earlier in the year, expectation for rates for 2019, for 2020 were materially better. The outlook, maybe in terms of trade and the European economy, was a bit stronger. Maybe there was less political uncertainty around Italy. As we move into, or looking into 2019, the ECB itself has pushed back those rate expectations, and that's hit the valuation of European banks, which have fallen in value this year and have seen earnings estimates cut. And until there's better visibility on that outlook, earnings expectations for the banks are going to struggle.
And in terms of where we ultimately go with the Northern European vs the Southern European, is there a clear bifurcation in your mind as to the opportunities that you see in the different geographies?
I wouldn't call it a bifurcation, but certainly there is a big elephant in the room that we haven't mentioned yet, which is the NPL, the non-performing loans. There's 700 billion in Europe on non-performing loans, and unfortunately they are not evenly distributed between North and South. The reality is that peripheral countries like Greece, Spain, Italy have a disproportionate amount of these loans. We believe that until this situation is resolved, particularly in Italy, that perhaps no bifurcation, but certainly a slight two-speed situation will continue.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.